seems like a ho-hum quarter. What's your read?
Yeah, I think that's right. Maybe a little disappointing, but in line with the pre-announcement that we heard about a month ago. So they let us know about a month ago the U.S. was going to be about a 1% comp, so fairly disappointing. They said China flat to negative. China was down 2. And to the comments earlier, there is a little bit of probably nationalism playing into that, but I think also there's a delivery issue in China where delivery is becoming more pervasive. They aren't quite there yet. There's some cannibalization. So there's a couple of issues popping up there that we didn't really expect. But the U.S. ho-hum, I think, is a good way to describe it.
But that's bad news, though, for China. All of the growth is riding on the business in China, is it not?
Yeah, that's sort of where they've shifted the growth story is from the U.S., which is the vast majority of the business now, to saying that China, give it 5 years, give it 7 years, and it can rival the U.S. Now seeing that negative comp does make you wonder a little more about the health of the base. Now, some of that is cannibalization on purpose to try to fortress the market, if you will, in front of competitors. But nonetheless, you don't like to see a negative comp in a growth story. And I think that does raise some concerns around how competitive that market is as Costa and some more real local players get aggressive with price. And Starbucks is not really a value player per se.
You think they should spin off the China business like Yum did some years ago?
At some point, I think that will make sense. At this point, I think they need the Starbucks infrastructure to be able to grow that effectively and do it profitably. So I think it's probably early to talk about that. China Yum became sort of the tail that wagged the dog. I think we're not quite there yet for Starbucks. It may take 5 years, but I think over time we'll have that conversation more and more.
You're equal weight on the stock. Well, what changes that rating?
I think we need to see a real credible reason why the U.S. is going to reaccelerate, right? We've seen decelerating comps in the U.S. going from high single digits to the low single digits now for a while. So I need to be able to see why traffic is going to go from down 2 to up 1, up 2, things like that. And they've thrown a lot at the wall in terms of new beverages, new food items. I need to be able to see everyday platforms that are driving real traffic. And despite mobile growing 14% this quarter, it's been consistently mid double digits. They really haven't driven that through to same-store sales growth. So we'll see if they can put up some U.S. acceleration, because keep in mind, despite China, and even if that does recover more quickly, U.S. drives the profits here. So I need to see U.S. acceleration.
You don't sound that optimistic that that's going to happen. I mean, the business is so mature here in the U.S. It's a pretty heavy lift.
It is mature, and also keep in mind, a month ago they announced they're going to close 150 stores in the U.S., more than what they're used to doing. So there are more stores than probably what most thought that were underperforming a little bit. And then we did some work recently talking about new product introductions. In most years in the past few, they've launched about 30 new beverages. So a lot, again, being sort of thrown at the wall to see what sticks. They've changed that strategy recently to see if more platforms, as opposed to really kind of rapidly pulsed limited time offers, can drive more same-store sales. I think it's just very early to say. I will say this, valuation is at the low end of its 5-year range. So if things do get a little bit better in the U.S., we could definitely become more constructive on the stock. We just haven't seen that yet to get more excited.